Hello, welcome to the Villages, Florida. My name is David. I'm a realtor with Florida Realty Investments, and I can be reached at DavidisinFlorida@gmail.com. If you're trying to buy a property in the Villages and want to know what a good price would be, or you're trying to sell your property in the Villages and you want to do so in a reasonable period of time at a fair price, please reach out to me at DavidisinFlorida@gmail.com. Be happy to help you. Couple of things to note, as always. First, all of this information is drawn from the multiple listing service. It does not include any properties on the VLS, the Villages Internal Listing Service. Therefore, if you are looking to buy a house in the Villages, I suggest that you employ two brokers, one who can show you properties on the VLS and one who can show you properties on the MLS. Without both brokers, you will not be shown all the properties that are available here. Second thing is make sure that you check the date. We produce this show every Monday. Make sure you're getting the most recent information. So let's begin. As always, we start by taking a look at what's happening with interest rates, and in a few moments, I will show you what effect interest rates really have on the value of properties. But what we're looking at with this graph is the 10-year government bond. Those who have watched this show before know that the 10-year bond is the government bond that most closely tracks the mortgage rate. And looking at this graph, it's quite evident that we're back to some of the highest levels that we've seen since about this time last year. Looking at this graph, it appears to me that rates are heading higher, but I've been called Dr. Doom for that perspective. You can form your own opinion. Let's take a look now at what the effects are of interest rates on the real estate market. We did a program on the effect of higher interest rates almost exactly a year ago in April of last year, and we looked at the effect that the mortgage rate increasing from 2.75 to 5% was. Those are the first two blue boxes that you see here on this Excel spreadsheet. I'm going to walk you through the spreadsheet. You can get some idea as to what the effect of interest rates are and why higher rates invariably mean lower real estate prices and vice versa. Let's start by taking a look at the first blue box, and this looks at a best case scenario back a year and a half, 2 years ago, when mortgage rates were 2.75%. At that time, if you'd borrowed 400,000 for 360 months, which is 30 years, your payment would have been $1,632, of which interest would have been $900 and principal would have been $716. If you had the ability to make a payment of $2,000 at a rate of 2.75%, your $2,000 payment would have been sufficient for a mortgage balance of almost $490,000. The second blue box shows the rates that were in effect in April of last year, which were 5%. And the second blue box indicates that if you borrowed 400,000 at 5% for the same period, your payment would have gone up by 31% from 1,600 to 2,150. Interest would have gone up by 82% from $916 a month to $1,600 a month, and your principal reduction would have been reduced by 33% from $716 a month to $480 a month. Keep in mind, all of these figures are just for the first month. The interest would reduce slightly every month thereafter, and principal would increase. And looking at the bottom of the second box, you can see that rates increasing from 2.75 to 5% means that your $2,000 payment would have only been able to afford a mortgage of $372,000, a decrease of almost 24% from the $490,000 that you would have been able to afford. Things are even worse today, though, because if you look at the box to the right, you can see that currently mortgage interest rates are somewhere around 7.5% for 30-year money. This is for the best credits. And comparing that to what was in effect almost 2 years ago, you can see that the payment has gone from $1,633 to $2,800, an increase of 71%. Interest is up from $916 to $2,500, an increase of 173%. Principal's down from 716 to 296, And the size of the mortgage that you could afford to take out with a $2,000 payment has decreased from 489,000 to 286,000, a decrease of 41%. Theoretically, the increase in interest rates from 2.75 to 7.5 should have caused property values to decrease by almost half. Here in Florida, we seem to be relatively immune because of geographic factors. A lot of people are moving here from other states, and that has protected us. But overall, the fact that interest rates have increased so dramatically means that prices invariably will have to adjust lower. Let's take a look at the Villages real estate market now specifically. Looking at total listings, we can see they're down very slightly and have been trending lower for the last 3 months or so. Currently, there are 322 active listings, down from 327 last week. Prices range from 179,000 to $2.9 million. Here we take a closer look at listings in more detail, broken down by price segment. This week, in the most active price segment, the $300,000 to $500,000 range, there are 203 properties for sale. Last week, there were 206. The week before, there were 213. The week before that, 219. Then the week before that, 222. Looking at the listing price per square foot, we're down to new lows. We're down to $258.20 a square foot median listing price for all listings, down from 260 last week. And this is the lowest number we've seen in a couple of years. This shows us the median time on the market for all listings. This is the longest we've seen since we started doing the show over a year ago. 54 days, the median time on the market for all listings, an increase from the 52 days that we saw last week. And our last look at listings, this is the number and percentage of all listings that have been on the market for longer than 100 days. 25% of all listings, 81 out of the 322 listings, have been on the market for more than 100 days. And you can see that this data point has been getting worse steadily for the last 6 weeks. Here we look at new listings and homes that went pending, get some idea as to how many properties have entered and left the market over the last 7 days. 26 new listings compared to 23 over the previous 7-day period, and 37 homes went pending compared to 39 the previous 7-day period. You can see that the number of homes going pending has remained fairly constant, whereas the number of new listings has been dropping dramatically recently. Here's a closer look at the new listings, get some idea as to what price segments they fall into. Over the last 7 days, there were 26 new listings compared to 23 over the previous 7 days, ranging in price from $254,000 to $825,000. Most active price segment, $300,000 to $500,000 range. Last 7 days, 18 listings. Previous 7, 13. Previous 15. Prior to that, 20. And the week prior to that, 23. Here we look at the homes that went pending over the last 7 days to get some idea as to what the median price per square foot was. $256.29, very similar to the number we saw last week of $256.44. This is a look at how long homes that went pending over the last 7 days were on the market before going pending. A median 37 days compared to 45 days for the previous 7 days. We still seem to be in the range of 30 to 40 days. Here we take another look at the homes that went pending over the last 7 days to get some idea as to how aggressively sellers had to reduce prices. And we can see that for homes that went pending over the last 7 days, the median decrease from the original list price was 6.67%. This is worse than the 4.34% decrease that we saw for the previous 7 days. This is our last look at the pending home sales. We're tracking what percentage of the homes that went pending over the last 7 days went pending within 7 days of being listed. 19%, very close to the 21% that we saw last week. 7 out of the 37 homes that went pending were on the market for 7 days or less. So now we look at the homes that sold and closed over the last 7 days. They numbered 46, a very slight reduction from the 52 homes that sold and closed over the previous 7 days. Prices range from $252,000 to $775,000. A closer look at the homes that sold and closed over the last 7 days, broken down by price segment. Most active segment, $3 to $500,000 range, 33 homes sold and closed. Previous week saw 30. Week prior to that, 18. Week before that, 22. And the week before that, 13. Here we look at the price per square foot realized on the properties that closed over the last 7 days. It's exactly the same as last week, $253 a square foot. I don't see any clear trend visible in this graph. Here we take a look at how long homes that sold and closed were on the market. 43 days, substantial increase from the 30 days of last week. We'll have to wait and see if a trend becomes apparent here. This is our last look at the homes that sold and closed over the last 7 days. How many of them, what percentage were taken off the market within 7 days of being listed? 26%, 12 out of the 46 homes that closed over the last 7 days were on the market for less than 7 days. This takes a look at what percentage of the properties listed have decreased their asking price from their original listing price. And believe it or not, to 2 decimal places, the number is exactly the same as last week. 59.94% of all the properties currently on the market in the villages have reduced their asking price from the original listing price. This graph shows us the median percentage decrease for all listings. Of all listings currently on the market in the villages, 4.82 is the median decrease from the original listing price. So that concludes this week's look at the villages real estate market. If you have any questions about buying a property in the villages and want to get a good deal here, or you're trying to sell your property and are trying to maximize your return in a reasonable period of time, please reach out to me at DavidisinFlorida@gmail.com. I'll be happy to help you. I'll also be happy to answer any questions about life in the villages itself. Hope to hear from you. Take care.